The S&P 500 is now in the danger zone, with it being 2 days below the 200 daily moving average. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Friday in SPY, we were down 1.44% on very high volume selling, and we now have the second day in a row closing below the 200 daily moving average. So when you look at the price, we clearly have lower highs and lower lows because we did break down below the 200 daily moving average, and we're now starting to see a lot of long positions getting liquidated as they're preparing for lower prices. Now we are getting very oversold to the downside, and we did close below the Bollinger Band, so there is going to be the possibility we need a dead cat bounce before we go any lower, but you need to be very risk off and cautious below 393. There's obviously a lot of fear going on with some of the banking issues, and that is causing a lot of weakness in SPY because financials is heavily weighted in the S&P 500. So be very cautious in this danger zone below 393. There is the possibility we are trying to revisit the lows from December, which is likely going to take us down to 380 to about 377. If we break down below these December lows, it's even easier to go back down to the October lows, so just continue to manage your risk as we continue to break down through support levels. If you want to short this market, you need to be shorting from the resistance up here at 393, and that is exactly where we got rejected from on Friday after we did get a bounce back up to that level and instantly found sellers right there at 393. Now, never assume the market is only going to move in one direction, so if you are shorting the market, you still need to manage your risk very carefully, which means if we start closing back over 393, you need to instantly get more bullish, just like below 393, you instantly need to get more bearish. So right now, SPY below 393 is the danger zone where we could continue to flush on high volume selling, so manage your risk according to the possibility that we could be coming back down to about 380. So right now we clearly have this downtrend of lower highs and lower lows, with the next downside targets on a break below 385 down here at 380 and then 377. On the NASDAQ 100 triple Qs, we were down 1.4% on Friday, and the triple Qs closed that gap down here at 288, and that is exactly where the triple Q stopped and found support. If we break down below the gap fill at 288, we're likely going to the gap fill at 273, so the triple Qs are risk off below 290. Now keep in mind the triple Qs did break down to a lower low just like SPY, so we have lower highs and lower lows on the triple Qs on the breakdown below 290, so we now have the confirmed downtrend, and there's a good chance we're going to continue to see this trend developing unless we get a reversal in the price action. The reversal in the price action is going to require a break back over 290 and then 294 and a daily close back over 300. So like I said, this is the danger zone because we could continue to see high volume selling, and the drop from 288 down to the gap fill at 273 is still another 5.3% to the downside, so that is a substantial move that is still possible. On the Dow Jones, we were down 1.04%, and just like SPY, we have the high volume selling and the second day back below the 200 daily moving average, and we're sitting right on top of the resistance bear market trend line, which is the support zone around 318. I said it before and I said it again, below 324, we are likely coming down to fill the gap at 311, but we will need to break down through this support, which is right here at 318. Any bounces from here, you're looking for resistance at 324 and 327, and we need to get all the way back above 335 to break the downtrend. On the Russell 2000 IWM ETF, we were down 2.88% on Friday, and you could see the financials selling off is really affecting the small caps, and we had a huge gap down and close near the low of the day, and we did break the support at 177. We are a mile below the lower Bollinger Band, and we do have a gap to fill at 181.23, so there is a very good chance we're going to get a dead cat bounce back up to that 200 daily moving average and fully close the gap. So if you're shorting the small caps, you need to be very cautious of a very strong bounce back up to fill that gap, and then we could continue lower back down towards 170. Remember, these things happen very quickly when volatility is this high, so there's a very good chance the market continues to move quickly from here. On the ARKK ETF, we were down 3.41% on Friday, and we're continuing lower ever since we broke down below 39. That was a confirmed downtrend, so we are continuing to expect lower highs and lower lows, and that's exactly what we're getting. The breakdown below 37 means we're likely going to 34.6, but we are getting way too far overextended below the lower Bollinger Band, so we may see a bounce before we get there. Don't forget we have that gap all the way down there at 31.68, so there is plenty more downside potential in the ARK ETF. On the VIX, we were up 9.69% on Friday, and the VIX at one point in the day was trading up there around 29, so we are definitely in a very highly volatile market, and anytime the VIX is above 20, you need to remain cautious, and the VIX is above 20 now for 2 days in a row. So a lot of this banking fear is obviously working its way into the VIX, and that is why the VIX is spiking so heavily, so just be cautious, and don't forget volatility does work in both directions, so if at any point some of these fears subside, we could still see a very strong VIX crush, so do keep in mind anytime the VIX is crushing, the market is likely going to go higher. On Bitcoin, we're currently down about 0.25%, trading at 20,500, and we are getting that bounce off of the 200 daily moving average, which was our price target during this downtrend. So there is the potential this oversold condition in Bitcoin was the low, and we could break the downtrend from here, but we need the confirmation, which is going to be the break back over 22,500. If we get rejected from a lower high like the resistance up here at 21,300, we could still come down here towards 19,000, so do keep that in mind. On Google stock, we were down 1.83% on Friday, and we fully closed all of the gaps to the downside, and we're back down to the channel bottom low, which is this support at 90.5. If we break this support, we'll revisit the low at 89 and then likely come down towards 86, and then below that we have the low from November, which is down there at 83.4. Now as long as we can stay above 89, it is possible to bounce off this channel low and come back up towards a resistance at 95.6, so do keep that in mind. On Amazon stock, we were down 1.65%, and we clearly have the downtrend and the rejection from the negative 50 EMA, and we're very close to closing the gap at $90. Below the gap for that 90, we still have a gap at 86, and we can still retest the low while we have the downtrend at 82. The bulls need to break back over 98 and 102 to break the downtrend, and then we can start trending higher towards 109. On Microsoft stock, we were down 1.48% with a clear rejection from the resistance trendline and now coming back down below critical support at 252, sitting right on top of support at 248. We need to break down to a lower low below 246 to hit our next price target lower at 242, and if we break all of that support, we do have this gap to fill all the way down here at 226, and that will be a confirmed downtrend once we break below 246. On Nvidia stock, we were down 2%, closing right on top of the support zone between 227 and 230, and we need to bounce from here, otherwise we are likely going down to fill the gap at 211. If we bounce from here, we need to break resistance at 244 to fill the gap at 258. On Tesla stock, we were up 0.3% on Friday, and Tesla is getting extremely oversold and right on top of that critical support at 173. From here, we should be able to bounce back up towards 183 and test it as resistance, and if we get rejected, we'll be looking for a break of support and going down towards the next leg lower at 167. Below 167, we're likely going down towards the gap for that 146, so you need to be very cautious if you're still bullish on Tesla because this is a confirmed downtrend that is heading lower in a very impulsive direction. On Apple stock, we were down 1.39% on Friday, and we did lose that critical support at 150, which means we're likely coming down to fill the gap at 146. Below 146, we have support at 145, so that is going to be a strong support zone. And then below that, we're likely coming back down to 141. If we break down below 145, this will look like a double top rejection, so do keep that in mind because that could send us to much lower prices down into the 130s. On the financials, we were down 1.82% on very high volume selling, and we're now below the lower Bollinger Band for the second day in a row and below the 200 daily moving average. We need to hold any of the support levels between 32.85 and 32.47, otherwise we are likely going to continue to capitulate. On the industrials, we were down 1.86% as we're closing the gap at 100.5 and then some, breaking the low and flushing down towards the 200 daily moving average at 95. The healthcare sector was down 0.74%, continuing that rejection from the channel bottom low and making another daily closing low on high volume, so we clearly still have the strong downtrend. The energy sector was down 1.28%, coming back down to our support at 82.6, and then below that we're likely coming to 80.5, and below that we have a gap at 73. This is a confirmed downtrend. So jumping back over to the S&P 500, as you can tell from the charts, there are a lot of downtrends and a lot of critical support levels being lost, so we are now in the danger zone of risk-off territory, and we do have a very high VIX and a very volatile market, and I want to remind you that volatility does work in both directions, and a lot of these high-volume selling capitulation events can lead to strong bounces. So don't just blindly short the market without managing risk. You need to manage your risk right there at critical resistance, and if we break above that level, you instantly need to get more bullish because we could continue to get a counter trend rally. However, these are clear downtrends, so continue to expect lower highs and lower lows until the trend reverses, because you want to trade with the direction of the trend. If you want to trade with other price action traders, come join us over at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. I also have Bank Trade Alerts, which sends you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank or the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.